let me ask how you can change that mix, or if you want to change that mix and steer customers towards more profitable strategies, or are you happy having a chunk in passive?
We are very pleased with our Q3 results that we've seen, net inflows of 6.2 billion and inflows year to date of 13 billion. And those inflows are coming across all of our asset classes, including passive, yes, also alternatives and multi-asset. And those are the three growth strategies that we focus on at DWS and are driving our inflows in the third quarter. We, of course, see that there is a shift across the barbell of asset classes, and what's really important for us is to be able to offer diversified solutions to our clients across all of those asset classes in such a market environment. So absolutely, passive is performing very strongly for us, but also our liquid strategies in our alternatives platform and also multi-assets.
But you need to ensure, of course, good morning, Claire, you need to ensure, of course, that those inflows work for you, that you manage to increase revenues and increase profits off those inflows. Does that involve trying to get people to move from passive to active, or is that not the role of the business? Do you just have to offer the three and let the cards fall?
I think our role is absolutely to offer good investment performance for our clients, solutions that they require in such a market environment, and solutions across all of those asset classes. And of course, clients will risk allocate between active and passive and alternatives through different cycles and different parts in the cycle. And we're able to offer all of those solutions across all of our locations as well. So the diversification that we have in the portfolio is really important to us. But also profitability is what counts. And that's why we have a cost-income ratio target that we measure ourselves against. This year we have a cost-income ratio target of 70%. We're very much on track to achieve that, and we've increased our profits by 9% year over year in the first 9 months, and that has been achieved through managing our costs, managing efficiencies, as well as generating inflows across all of those asset classes. So yes, revenues in the third quarter, they have been stable, but the management fees, which is driven by our AUM, has grown very slightly in that third quarter, and we're very focused on inflows consistently at a 3 to 5% ratio over the medium-term horizon.
I'm starting to think stable is market speak for falling. Your revenues were down. So on the bottom line, yes, you're a positive contributor to Deutsche Bank. In terms of inflows, I think the market is positively surprised or pleased with your track record that you're building, and you're hitting your targets for sure. I think you want 3 to 5% annual inflows as your set targets. Do you want to raise revenue? Do you have a plan to raise revenue?
I think there's many parts of our revenue composition. We have the management fees driven by our AUM, and we of course have performance fees, and we have income from our joint venture Harvest investments in China as well. So we have many parts of our portfolio of revenues, and of course we do look to grow our revenues, but we also operate within a market environment. We see margin compression across the entire industry. We've had a lot of volatility in the markets. We're in a low interest rate environment at the moment. So all of those headwinds mean that we really must manage our revenue base through generating inflows across all of our asset classes and all across the globe. So we have a global base where we can offer solutions to both retail and institutional clients. And I think that diversification in this kind of market environment is very important to us. So we have had revenues that are approximately flat year on year, but management fees growing.
Christian Saving has talked about wanting DWS to become a top 10 asset manager globally. Lots of people say that involves M&A. We know that there have been conversations of that type with DWS. Can you tell us about anything that's being explored at the moment? Any conversations that are happening at the moment, or any targets, any direction in mind for M&A?
Well, as you would expect, I can't comment on any market rumours or speculation of that type. But what I can say is that we are very focused on organic growth, our organic growth strategy. And we will, of course, explore inorganic opportunities as they arise. We will look at those options as they come up in the market. But we are very focused on profitability and our organic growth strategy in the immediate term.